All right, traders, let's get right into it. Wow, what a day, right? Another day, another wild session that we had today where the market literally swung 2% in each direction. Just think about that, all right? So let's get into the technical setups from today, guys. First things first, what you're seeing on the screen is a chart of the S&P 500. This is the global benchmark. If you trade Forex, your symbol is SPX 500. If you trade futures, it's ES. And if you trade stocks, your symbol is SPY. And what you're seeing overlaid on top of the chart, this green and red color band, is the volume indicator that is designed to do one thing and one thing only. Okay, it's designed to predict the starting point of a trend. When this thing turns green or when this thing turns red, you better pay attention, okay? Because so far in the back testing that I've done, folks, I can't find a better indicator. And I've looked all over the world, okay? There is no better indicator than volume if you like to trend trade. Okay, this is a trend trading style, a trend trading technique. This is not trying to catch tops and bottoms like amateurs and retail traders who are screwing around with their candlestick garbage and their candlestick nonsense, right? This is for the amateurs. This is for the retail traders. Leave them in the trash heap in the garbage pile, all right? What you're seeing here is a more professional, sophisticated display. And again, every day when you come to your computer and you decide to start looking for setups and you want to actively participate in the market looking for low risk, high probability setups, well, guess what? The first thing you have to do is get the direction right. Once you get the direction right, trust me, folks, everything is pretty much going to fall into place. You still have to be mindful of risk and use stops, but at the end of the day, it is my firm belief that this is a system that's clean. It's organized, right? It just makes sense. Anyway, let's take a look at the setups. This is the S&P, like I said, but don't worry for all you NASDAQ lovers. NASDAQ was awesome today. It just ripped. It caught a lot of people flat-footed. A lot of guys were betting against the NASDAQ and they got their faces chopped off, and the volume indicator turned green right over here. Like I said, don't bet against the colors, folks. All right. Anyway, let's look at the setups. I want to show you something really interesting. Okay, I'm going to talk to you guys about how to look for very high probability setups. Okay, what does that mean? Well, let me just get this out of the way here. In fact, let's just zoom in. Let's zoom in as best as we can here, okay? So in a location in the market where you've identified a trend change, okay? So say you slap on this volume indicator, you've identified a trend change that showed up right here at 8:46 a.m. Central Time, okay? Well, one thing you could do is wait for the price action to dip below the indicator. You understand what I'm saying? And what you're essentially trying to accomplish here is to identify a very specific pattern when the market price action does dip. And I say dip, not rip. Okay, it has to slightly, ever so slightly dip below the price action before it takes off. And this is a pattern called a retracement. Okay, I touched upon this on a couple of videos ago, but I want to really make sure I hammer this point home, guys, because look, once you get good at identifying retracements, then a light bulb is going to go off in your head. Things are going to start making sense. And what I've drawn here is an approximation of what a retracement pattern looks like. Okay, there's three legs. Leg 1, leg 2, and leg 3. What are the components of these three legs? Well, leg number 1 identifies the direction, right? This is essentially the vol indicator turning a certain color, in this case, green, okay? Now, leg number 2 is the market pulling back, and it has to be a deep enough pullback, right? That's why it's called a retracement. We don't want shallow retracements. We want nice, deep retracements. And my definition of a deep retracement, I think you guys are going to find this very helpful, is that the market does have to come back below the green color, and it also has to give us a green bar that closes below the color. Do you understand what I'm saying? And it's actually very interesting because in today's session, we got a pattern that I've never seen before, which is we actually got 2 of these green bars show up beneath the color, right? And so the way to play this if you're so inclined, all right, if the way to play this particular trend trading, aka retracement strategy, is to wait for setups that look like this. You're not going to get them all the time, but that's also the beauty about using a retracement pattern within the context of a volume-based indicator, right? Because if this is all you did today, man, just in the morning session, right? Again, 8:45 to 9 o'clock, this is when the signal showed up. If you're not at your computer at 8 o'clock, 9 o'clock in the morning, then I don't know what you're doing, right? You're doing something else. Why are you doing something else? If you want to trade, you want to make money in the market, you got to recognize that you have to be able to trade peak times. In my opinion, the peak times is the morning session. Look, we're only talking about 3 to 4 hours a day, folks. It's not a large commitment of time, okay? Anyway, so if this type of pattern was all you look for in the morning session, right? And if I zoom out here, show you how this pattern played out. Let's zoom out here. Look at that bad boy. Right? Guys, this was 300 pips or 300 ticks if you're following in futures from the entry to the high, and this assumes that all you did was play the morning session. I'm not even talking about anything after lunch, okay? How about the NASDAQ? How did the NASDAQ do today? You see any patterns? Right? What did I just show you 5 seconds ago? I showed you a retracement pattern that looks like this. Establish the direction, give you the retracement, and then kaboom, wait for the market to trend. Right? Isn't that interesting how retracement patterns, when you combine it with a volume indicator, can generate huge potential profits if you know what you're doing? Folks, this was 800 pips or ticks if you're following along in futures or Forex, and just do simple math in your head, all right? At $5 a tick, 800 times 5 is a shocking $3,500 potential. Okay? Just following a simple color change. And if you're wondering where your stop would go, well, remember that retracement pattern. We want to wait for the market to establish a trend. We want to wait for the market to dip, not rip. Needs to dip back below the color, and we're waiting for the first green bar that shows up beneath the color within the context of the volume indicator. So this makes it the entry bar, and our stop would go 1 or 2 ticks below that bar right there. And as you can see from today, at least, the stop never got touched. All right, so for all you guys that went on vacation and thought that the holiday season was going to be slow, boy, are you missing out. It is never slow. I don't think it's going to be slow for a long time. I am convinced that every day is going to look like this, just based on all the geopolitical news. We still have a lot of issues in the country and in the world to be resolved, right? I'm convinced that there's a lot of volatility hiding right below the surface. And for all you guys that traded the volume indicator on the NASDAQ today, congrats. It was an incredible day. Guys, that'll do it for this video. If you'd like to get your hands on this powerful volume indicator, then get in touch, call, text, email, whatever's convenient, and I'd be happy to hook you up with a free one-on-one demo, really show you how this volume indicator is going to supercharge your trading. Guys, thanks for watching this video, and I'll see you on the next trade.